Hey everyone, it's Saturday morning, June 20th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Global markets had a volatile week, but most major indices still managed to finish in positive territory. The biggest story was the Federal Reserve. In Kevin Warsh's first meeting as Fed chair, interest rates were left unchanged at 3.5 to 3.75. However, investors focused on the Fed's updated dot plot, which showed that 9 officials now expect rate hikes later this year. That surprised markets and pushed short-term Treasury yields higher. On the geopolitical front, investors welcomed news that the United States and Iran signed an interim peace agreement, allowing shipping traffic to resume through the Strait of Hormuz, one of the world's most important oil routes. As a result, oil prices fell sharply, with both Brent and WTI crude touching their lowest levels since early March. Lower energy prices are generally positive for inflation and helped sectors such as airlines, travel companies, and consumer-related businesses, while weighing on energy stocks. Meanwhile, the U.S. economy continues to show resilience. Retail sales rose 0.9% in May, more than double April's increase and well above expectations. While strong consumer spending is positive for growth, it also gives the Fed more room to maintain a tougher stance against inflation. Overall, investors are balancing encouraging geopolitical developments and lower energy prices against the possibility of a more aggressive Federal Reserve than previously expected. Looking ahead, as the second quarter comes to an end, markets will focus on fresh inflation data and earnings reports from companies including FedEx, Carnival, and KB Home, which could provide valuable insights into the health of the consumer and the broader economy. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you Monday morning.